with MrNoFluff.com, and I just wanted to report to you that today Dow Jones crashed 345 points due to tariff, due to debt, and also global growth fears. Okay, average home buyer, average person in the stock market. Um, so let's talk about the stock market. For since 2015 and 2016, I've been ringing the bell saying, hey, there's a major bubble in major assets like stocks, like real estate. Okay, and for the past 3 months, we can see that the waters are been in the stocks, up and down, up and down. We've been having historical highs and historical lows. Okay, and today it's in the red, 345 points, etc. Now, why is it in the red? Well, one of the very first thing is that all the tariff, all the taxes that you guys are gonna have to start paying on many things you buy, from cars to bicycles to even your food. Because what people don't understand is most of the stuff that we get are actually from China. If you look in your closet, look at any shirt, any toys, any things you may have, it probably says made in China. Okay, so when there's a trade tension, what happens is that you and your friends and your cousins and your mama, we all have to pay more money when we go at the register. Why do we have to pay more money? Well, Big Brother's going to make more taxes on us. That's what a tariff is. It's a tax on the people. Now, many people say, well, the corporations are going to take it. No, the corporations are going to raise the price to cover the hit, which means, and basically, you're the one that takes the hit. It's kind of confusing. It's kind of like inflation. Many people don't know what inflation is, so they're asking the government to get a higher minimum wage. They don't understand that as soon as they get that higher minimum wage, inflation instantly hits as well. Okay. So that said, the stock market, just like life, is we live in a duality. Okay, you can't go right without left. So this is a pendulum. And right now the stock's been going up and up and up and up and up. Guess what's gonna happen next? Go this way. Now it depends on how far you go look back. For quite a while now, the stock market is just going up and up and up and up. And sure, we had a correction in 2006, 2007, 2008, but it should have popped then, and it didn't pop, okay, because it's just stocks go up. The more debt Big Brother gets into, the more inflation it is for you, which is a hidden tax. For example, I just posted on my Instagram and Facebook. It's in the 1970s, it would have cost you $24,000. That same house today costs you $240,000. $240,000. That's crazy, ladies and gentlemen. Okay, that's inflation, which means the central bankers, the Federal Reserve, they're printing money, and what that means for most people is that your buying power is shrinking. You may still get the same salary, or your salary may have increased over the years. However, it has not increased to what the inflation actually is throughout the years, because a house in the 1970s, middle class, middle in level home cost $24,000. Today, same house, $240,000. It's gone up so much. And so the more the government gets into debt, the more inflation is on your shoulder, because all the payments are going towards debt reduction, and more money is being printed thanks to the Federal Reserve, because Uncle Sam's going to borrow more money. Okay, so dilutes your buying power, and you're responsible to pay the debt through taxation, because who's going to pay that debt? The government doesn't pay. The government, they tax us, so they don't generate anything, just the people. Okay, so stocks are, in my opinion, since 2015, 16, I've been letting you guys know that there are massive bubbles, and it's going to pop very, very soon, and it's going to leave a lot of people devastated. Okay, I'm very sorry for that. Okay, same thing with the real estate. The real estate sector is going to pop, but it's going to create a great opportunity for real estate investors that know how to market to homeowners direct and buy their house direct from them versus going traditional, which is hiring a real estate agent and getting a loan. Okay, why? Because there's going to be so many amount of people, what I call motivated sellers, that are going to be exiting those assets that just popped. For example, real estate stocks. They're going to be selling stocks. They're going to be selling the real estate property, and these people are going to flood the market, and there's not going to be that many buyers, because unlike what it is today, when the market is good, going up, everyone's buying, making money. When it starts going down and people start losing a lot of money, they're not going to want to buy. So it's going to create a great opportunity if you know how to do this stuff, like how to market to these sellers, how to talk to them, how to negotiate, how to structure deals, so they become the bank for you. Okay, they become your lenders. That's the strategy that I used in the last crash, 2006, 2004. I didn't buy houses because I had a pile of cash. I didn't buy houses because I went and signed a loan from a bank. No, I used my money to market, find these motivated sellers, and work direct with them. Now, what type of motivated sellers did I choose? Firefighters, regular Joes, etc. Okay, and the way I work with them is I help them out, because A, they couldn't make the payments anymore, or B, they were emotionally distressed and they want to get out of the situation. For example, they were going through a divorce. And so I stopped the bleeding on them and helped them move to the next chapter of their life. At the same time, I enriched myself. At the same time, I helped out all the other house owners around the area, because that house didn't go to foreclosure. And as more and more houses got to foreclosure, every house owner in that block, okay? And so it becomes a domino effect. Many sellers are going to be exiting that asset. People are putting houses on the market. There's too much inventory. People start defaulting. Banks have it, and now homeowners are competing with the banks. And guess what? The banks are doing short sales and selling it below the fair market value, and then which causes more homeowners to default, and so it becomes cyclical. Okay, so great opportunities are upon us. A strategy that I talk about is called subject to investing. If you're interested in learning how to do subject to investing, where you market to these motivated sellers, you talk to them, you negotiate, then you should highly join my mastermind. We meet once every Saturday, once a week, every Saturday, for about an hour, sometimes more, and I help you figure out how to find these motivated sellers, what to say to them, how to structure the deals, any of your questions that you may have, from marketing to funding to paperwork, etc. I help you with all that stuff, or I direct you where you can go to find the help. And it's all for just $19 a week. Okay, so $76 a month will get you into the mastermind club. It's called the Abundance Club. It's one of the most advanced things out there. I normally charge $1,000 for this mastermind, but right now you guys can get in it for $76 a month. And again, we meet every Saturday, so we're meeting at least 4 times a month, sometimes 5, depends on how many weeks that they are. And there's no sales pitch. I help you and I tell you where you need to go to get the information that you need. Unlike clubs where you spend $20 or $40, you drive there, you sit in traffic, then they have a guy come up there and the guy gives you this much information, and then the rest is sales pitch. I'm giving you all my information for free on my channels. You go and take action, and then you come into the mastermind club and you ask me questions on your action. That way you can actually get a deal. That way you can actually be your dreams, versus you go somewhere and they just talk and you just take notes and that kind of stuff, man. I don't want that. I want you to succeed, because I believe that you succeed through practice. That's how you learn to play an instrument. That's how you learn how to do martial arts, how to do wrestling, how to anything you want to do, you have to practice. And that's what's wrong with the school system, which is leading into this massive debt. Now let's talk about the debt. Okay, the federal government has massive debt. States have massive debt. Local cities have massive debt. Corporations have really massive debt, because not only are they borrowing money to buy their own stocks, not only are they borrowing money to open new locations, Not only are they borrowing money to make payroll, right? Now some of these, a lot of them don't even have a great system, they don't even have a great um, product. That's why you see GMC laying off people. That's why you see Ford laying off people, because their products is inferior. And the only reason they were able to succeed is because they're borrowing debt from the central bankers, Federal Reserve. They're just printing on a printing machine, and these companies are able to have success. But in this upcoming global crash, so many countries have subscribed to this subscription of getting into debt, easy money, fake money, massive printing, that so many countries that subscribe to central bankers are now upside down. Okay, and you can see the symptoms in France where there's massive inflation. You can see symptoms in Great Britain. You can see symptoms in and so on. You don't believe me? Just Google it. Okay, so much debt, major swings in the stock market, major bubbles in real estate, in stocks, so on, major debt. This only means one thing only. This is not going to be a correction. It's going to be probably the mother of all crashes, unless they print so much more money. And then eventually will be the mother of all crashes, because there's going to be civil unrest happening in France because too much money needs to be printed. Now guys, if you want to find these motivated sellers, because in this crashes we have massive amount of people running out of the real estate asset, because every other house is for sale, because they lost their job, because corporations are letting people go because they got in too much debt to buy their own stocks. There's so many other reasons. Then you should join my mastermind. It's called the Abundance Club. You can get more information at mrnofluff.com, and get mrnofluff.com, and it's just $19 a week, which is $76 a month. Plus I'll give you like $2,000 worth of bonuses, which is the course on how to find these deals and how to motivate, how to generate leads, etc. So I give you the course, which I sell for $1,500 a month. $1,500 for the product. It's called the Mother Course. I give you that course totally for free, included when you join the mastermind, because I want you to be your dreams in America. So you take this course, you study it, and then you take action, and then every week we meet, and I help you hold your hand for you to get your deal. Okay? Thanks for watching, guys. Hustle and bustle. I'll see you next time. Peace.